Let's note the following when it comes to allowable and non-allowable expenses in business income. Yeah, so where there is red, it's non-allowable. Where it is black, it is allowable. Yeah, you should note this. It will help you when doing your papers. Yeah, so when it comes to legal and audit fees are allowed. Debt collection expenses are allowed. Fees and penalties paid to the government, they are non-allowed. Then in case of donations, when they just give you donations are non-allowed. But in case it is donations to charitable organizations or to exempt organizations or to government institutions, it becomes allowed. Then in case of anything or any expense that is not business oriented, in case it is a private or domestic expenditure, it is non-allowed because it's not related to business. Then provision for bad debts if not specific. Provision for bad debts if not specific, it is non-allowed. But if it is specific, maybe they say that we are very sure that Jack is not going to pay us, it becomes allowed. But in case it's not specific is when they put a name of the person or the name of the company, it becomes allowed. But if it's not specific, it is non-allowed. Then depreciation is non-allowed. Then in case of business expenses, we mean things like administration expenses, marketing expenses, rent expenses, those ones, they are allowed. Then entertainment is non-allowed because it's not related to the production of income. Entertainment is non-allowed. Then meals and refreshments at arm's consideration, they are allowed. Arm's consideration, it means that the meals were provided to every employee in the organization, so they become allowed. But in case of meals and refreshments at non-arm's consideration, in case they were only given to specific employees, not all employees, it becomes non-allowed. Then we continue. We have wear and tear, also known as agreeable depreciation. It is allowed. Then capital expenditure, those expenditures that are incurred in acquiring capital assets or fixed assets. Yeah, like purchase of a motor vehicle, purchase of a van, purchase of things like furniture, software, like that. So any capital expenditure is non-allowed. Then provisions or recoverable costs. Any provision that is given in the question or recoverable costs, they are non-allowed. Then in case of domestic or private expenditure, any expenditure that is incurred for private use, it is non-allowed. Then in case of income tax, it is non-allowed. In case of pension paid to any person, any pension or penalty, they are non-allowed. Then in case of life insurance, it is non-allowed. Alimony or any contribution. Yeah, contribution received or contribution paid. Yeah, it is non-allowed. Then interest earned on a debt obligation acquired, interest incurred on a debt obligation acquired for production of income, it is allowed. In case you get a loan to use in the production of income or to be used in business, the interest that you pay on it is allowed. Then repair costs not exceeding 1 million, it is allowed. And then startup costs, 25% of it is allowed in the year in which the costs were incurred, and then in the following 3 years. So startup costs are for 4 years. Yeah, they are allowed for 4 years, but in that year, in that very year in which they were incurred, we allow 25%. So in case the startup costs are 10 million, 25% of it is allowed, which is 10 million. What's 25% of 10 million? So it will be 2.5. 2.5M, it becomes allowed in that year, then 2.5 in the next year, 2.5 in the other year for 4 years. Yeah. Then initial allowance of 50% on eligible property, it is allowed. In case they give you initial allowance on eligible property, you allow 50% of it. But it's not a common thing for ETAX. Yes, so these are the most common ones. You should take note of them. Wear and tear, all these. Yeah, you should take note of them. So if you master them, you'll be able to do a number on business income. Then we look at the tax credits. Tax credits. Like after getting the chargeable income, you're supposed to subtract, in case of any provisional tax paid, provisional tax and then withholding tax. You're supposed to subtract them from the tax liability in order for you to get the tax payable. We shall see that in the next video. We are going to have an example on business income. Thanks for watching. Don't forget to subscribe, like, comment, share with your friends.